guys, you okay?
Morning.
Nice to see you.
Nice to see you.
Yeah, Tom, good.
Good, thank you.
Grab a seat. Welcome to Blue Water's first in the series of Insight Energy chats with some of our deal team. So energy transition, everybody's talking about it. What does it actually mean? So I thought I'd bring some of the deal guys here. They're right in the middle of this and have a chat with them about what energy transition means to them.
Usually energy transition is always linked to reducing the temperature of the planet because it's too high and it keeps rising. But actually we also need to think about the effect that it has on humans now. It's something more near term rather than long term for me.
Well, to me, there are a number of new concepts around energy with relating to decarbonization and a certain environmental push. To me, the roots of energy transition are inefficiency. If you improve a process and can save energy, that's efficiency. It also happens to save a whole host of other things. Energy has been overproduced. People design systems for access and use, not for optimization. The more innovative thing is to use technology and innovation to make those processes and products more efficient. In the limit, conservation is the purest form of energy efficiency. And that's where it actually gets kind of exciting and interesting.
If we're all going to move to a more sustainable, more efficient use of energy, how do we make that happen? How do we enable that?
You will need a whole new set of infrastructure. Part of these will have to be, of course, investments in digitalization, and you need a decentralized energy with multiple renewable sources, actually understanding what's the supply and what's the demand to generate enough for everyone. Because, of course, wind doesn't always blow.
Tom, you and I talk many years about global supply and demand, the balance, renewables coming on, as Fiorella says, when the wind doesn't blow. What do you see the balance being of energy for the next 20, 30 years?
80+% of our energy has been generated with hydrocarbons. Everyone acknowledges it should be lower. In the process of going lower, everybody wants access and wants ready usage. Oftentimes they don't want to pay for it. As we accelerate, you run into a conflict. Is it clean and cheap or cheap and clean? If you want cheap and clean, then you don't have a subsidy. Things stand on their own 2 feet and you transition slower way. If you want to push toward clean first and cheap second, you need subsidies and regulation and intent. And that creates dislocation. And that really is where we are right now because people are more distributed, that they want distributed access. But as a result, we haven't really invested in the conventional side, and so the prices are skyrocketing. And so how far and how much price do we want to tolerate for a clean solution? That is inherently the question. From an investment standpoint, it's very tricky because for conventional sources, you have cash flow that is now accelerating as we run into some confrontations with transition. You have new technologies that are really hard to evaluate with metrics and so forth. You look at trends or revenue or so forth, but they're bleeding cash. Therein lies the rub of how we prioritize that and move toward it. Some of it has an impact element, but some of it needs to be rooted in some fairly fundamental cash flows.
Okay, Fiorella, energy transition, I mean, is it 2 years? Is it 5 years? How long is this going to take?
Becoming net zero in 2 years, for me, is like an overnight change, which is not going to happen. We need to get to net zero as soon as possible, making the right investments in the right technology, but of course also looking at return side of the investment clearly.
As fast as you can and still be pragmatic and make money.
We're talking about energy here, efficiencies. Where does oil and gas fit into this?
Where we, from an investment standpoint, can do quite well is to take a conventional supply chain business and transition that from a conventional to a new. As an example, Galileo has one of the best small-scale compression units in the world. Historically, they have produced consolidated or compressed natural gas. They've used that to go to the wellhead and create LNG. That application allows oil and gas operators to take what was historically flared gas and turn it into fuel. So that is a perfect example of a circular application. You're taking waste gas, which is either CO2 or methane, and converting it into fuel.
Guys, we're investors. How do we invest into projects that are going to give returns and impact? How do we do that?
Well, it's going to be a different kind of investment, most likely, because those will be all new technologies that we haven't probably seen yet, and we will need to educate ourselves first on all these new technology. But at the same time, we still need to remember that we're here to make a return. So clearly, we're going to look at both sides, if the technology makes sense, how the market is going to evolve, and we will have to take a view on that. I think that all this new technology and whatever is new brings a higher risk. So we will just need to assess, well, what is that risk, and understand if we can actually manage it.
All these sort of technologies that are emerging in the marketplace, how are you guys seeing them?
We do a lot of research internally. We try to understand what is changing, but instead of understanding what changed until now, we're trying to look into the future, what is going to change, and of course where we should invest.
What we've always tried to do is drive domain knowledge into our everyday. So we read a lot of research. We almost want for our young people, for them to be experts in 2 or 3 sectors or subsectors.
Yeah, great idea.
In energy transition, we need to evaluate the viability of a solution, use that domain knowledge to make better bets.
Fiorel, finally, as an energy investor, energy transition, does it give you opportunities? Is there an exciting future ahead?
There's a need to decarbonize. This will lead to so many new opportunities, so much M&A, so much capital raised. We have to be sure that we will be the first one to know, and we also have to be sure that we really understand the risks that we're taking.
Set the strategy, define people's roles, drive domain knowledge, and push your investment focus that way.
Similarly, we need to have a good management, because you can have the best technology, but without a good management, it's not worth much. And I think that what we're really good at here at Blue Water is choosing the right people for our portfolio companies.
Okay guys, listen, that's been super. Thanks very much for your time today. I think the insights are really good, and I'll let you get back to work now.
Bye, Fraser.
Bye, Tom.